Based on the historical data and forecast, Bitcoin exhibits a generally upward trend, though with notable volatility. The RSI consistently fluctuates, but the recent values above 43.5 suggest increasing bullish momentum. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a pullback or consolidation. Considering the support price of $112,500, I recommend a strategy that combines RSI and Bollinger Band signals. I will implement a portfolio with a 60% allocation to the RSI strategy and a 40% allocation to the Bollinger Band strategy. For the RSI strategy, I suggest entering a long position when the RSI falls below 37, with an entry price of $114,000. Set a stop loss at $112,500, just below the support level, to protect against a sudden downturn. Target a price of $117,700, aligning with the forecast for September 18, 2025. For the Bollinger Band strategy, I suggest entering a long position when the price touches the lower band, with an entry price of $114,600. Set a stop loss at $113,100, just below the center band. Target a price of $117,200, aligning with the forecast for September 18, 2025. This portfolio combines the strengths of both indicators to capitalize on the upward trend while mitigating risk. Based on the historical data and forecast, Ethereum exhibits a generally upward trend, supported by the forecast prices consistently above the recent closing prices. The RSI fluctuating between 48.8 and 56.2 suggests the asset is neither significantly overbought nor oversold, indicating a balanced market. The Bollinger Bands show periods of contraction and expansion, with the price recently approaching the lower band, suggesting a potential bounce. I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position entry at $4,410 when the forecast price hits. The stop loss will be set at $4,350, just below the recent support and the lower Bollinger Band to mitigate potential losses. The initial target price will be $4,500, aligning with the forecast and a reasonable profit margin. If the price reaches $4,500, I will move the stop loss to the entry price of $4,410 to secure profits and allow for further upside potential. The final target price will be $4,580, near the resistance level, where I will close the position to capture maximum profits. This approach balances risk and reward, capitalizing on the predicted upward trend while incorporating safety measures through stop loss orders. Based on the historical data and forecast, XRP shows an overall upward trend, supported by consistently bouncing off the 2.76 support level. The RSI consistently fluctuates, but has been trending upwards, indicating increasing buying pressure. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. Specifically, we will enter a long position at $2.93 when the forecast begins. Our stop loss will be set at $2.76, just below the established support level, to protect against a potential reversal. The initial target price will be $3.07, aligning with the forecast for September 18, 2025. To refine this strategy, we will incorporate an RSI-based exit strategy. If the RSI reaches 80, signaling an overbought condition, we will take profit at $3.07. Conversely, if the price touches the top of the Bollinger Bands, we will also consider taking profit at $3.07. This combined strategy leverages both trend analysis and momentum indicators to maximize potential returns while mitigating risk. This portfolio combines the trend-following strategy with RSI and Bollinger Band signals for a more robust and adaptive approach. Based on the historical data and forecast, BNB shows a clear upward trend. The price has been consistently increasing over the past 2 weeks, and the forecast indicates continued growth. The RSI values have been generally increasing, with the most recent readings above 60, suggesting strong momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. Considering these factors, I propose a long position strategy focusing on capitalizing on the upward trend. My recommended strategy is to enter a long position at $892. Given the upward momentum and the forecast, a reasonable target price would be $925, offering a potential gain of $33. To manage risk, I suggest setting a stop-loss order at $880, which is slightly below the recent support levels and the lower Bollinger Band. This strategy combines the momentum indicated by the RSI, the trend identified through historical prices, and the volatility suggested by the Bollinger Bands, creating a balanced approach for high returns. Based on the historical data and forecast, Solana exhibits a clear uptrend. The price has consistently been moving upward, supported by the recent forecast predicting further increases. The RSI values have generally been trending upwards, with recent readings above 50, indicating increasing momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering the support price of $213 and the resistance price of $257, I recommend a long position with an entry price of $222. A stop-loss should be placed at $213 to protect against a potential reversal. The initial target price is $238, aligning with the forecast for September 16, 2025. To refine the strategy, I incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, consider a long position. When the RSI exceeds 70, consider a short position. When the price touches the lower band, consider a long position. When the price touches the upper band, consider a short position. Combining these indicators, I propose a portfolio strategy. The primary strategy is a long position with an entry price of $222, a stop-loss at $213, and a target price of $238. If the price reaches $238, I recommend taking partial profits and setting a new target price of $240. This approach allows us to capitalize on the anticipated upward trend while mitigating risk through strategic stop-loss placement and profit-taking. Based on the historical data and forecast, Dogecoin shows a clear uptrend. The price has been consistently making higher highs and higher lows, and the forecast for the next week indicates continued upward momentum. The support price is consistently at $0.24, acting as a strong floor. The resistance price of $0.275 provides a potential ceiling. The RSI has been trending upwards, recently crossing above 60, indicating strong bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position with an entry price of $0.242. The stop-loss should be placed just below the support level at $0.238 to protect against a potential downside reversal. The initial target price should be set at the resistance level of $0.275, which represents a significant profit potential. Given the strong bullish momentum and widening Bollinger Bands, we can consider a second target price of $0.28 for an even higher return. This strategy combines trend analysis, support and resistance levels, and technical indicators for a balanced and high-potential investment approach. Based on the historical data and forecast, TRON has shown volatility with a recent downward trend, but the forecast indicates a potential upward movement. The RSI consistently fluctuates, dipping below 30 on September 9, 2025, signaling an oversold condition, and recently climbing above 50. The Bollinger Bands show that the price has been bouncing between the upper and lower bands, suggesting continued sideways movement before a potential breakout. Considering these factors, I propose a long position strategy with a focus on the anticipated upward trend in the forecast. My recommended strategy is to enter a long position at $0.34, coinciding with the beginning of the forecast period and a recent bounce from the lower Bollinger Band. The stop-loss should be set at $0.331, just below the recent support level and the lower Bollinger Band, to mitigate potential losses if the price continues to decline. The initial target price is $0.353, aligning with the forecast high for September 15, 2025. If the price reaches $0.353, consider moving the stop-loss to break even to protect profits and potentially extending the target price to $0.355, the forecast high for September 16, 2025. This approach combines RSI-based oversold entry, Bollinger Band confirmation, and forecast-driven target prices for a balanced and potentially high-return investment. Based on the historical data and forecast, Cardano exhibits an overall upward trend with periods of consolidation. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, but the forecast data indicates a potential breakout. Given the support price of $0.865 and the resistance of $0.907, I recommend a long position strategy. The entry price should be $0.88, aligning with the forecast for September 12, 2025. A stop loss should be placed at $0.865, just below the established support level, to protect against downside risk. The initial target price is $0.915, corresponding to the forecast high for September 18, 2025. To refine the strategy, we'll incorporate RSI signals. If the RSI falls below 20, oversold, consider a long entry at the bottom of the Bollinger Bands, around $0.782, with a stop loss at $0.77 and a target price of $0.88. Conversely, if the RSI exceeds 80, overbought, consider a short entry at the top of the Bollinger Bands, around $0.916, with a stop loss at $0.92 and a target price of $0.88. Combining these signals with the primary long strategy, I suggest allocating 60% of the portfolio to the long position, entry $0.88, stop loss $0.865, target $0.915, 20% to the oversold RSI strategy, entry $0.782, stop loss $0.77, target $0.88, and 20% to the overbought RSI strategy, entry $0.916, stop loss $0.92, target $0.88. This diversified approach balances risk and potential reward. Based on the historical data and forecast, Chainlink shows a generally upward trend, supported by consistently testing the $23.4 support level and approaching the $25.2 resistance. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. However, the forecast predicts a continued upward movement, with prices potentially reaching $25.8. Therefore, I recommend a long position strategy. We will enter a long position when the price retraces to the $23.4 support level, which has proven to be a reliable base. The stop loss will be set just below the support at $22.9 to mitigate potential losses if the price breaks down. The target price will be set at $25.5, based on the forecast and the proximity to the $25.2 resistance. This allows for a substantial profit while considering the potential for a price reversal at the resistance level. To further refine this strategy, we can incorporate the Bollinger Bands. If the price touches the bottom of the Bollinger Bands, around $21.3, it signals an oversold condition, reinforcing the buy signal at $23.4. Conversely, if the price reaches the top of the Bollinger Bands, around $25.9, it suggests an overbought condition, prompting us to take profits at $25.5. This combined RSI and Bollinger Bands approach provides a robust and adaptable investment strategy for Chainlink. Based on the historical data and forecast, Wrapped Beacon ETH shows a generally upward trend with some volatility. The support price consistently remains at $4,600, while the resistance fluctuates. The RSI indicates periods of both oversold and overbought conditions, with recent values trending upwards. The Bollinger Bands show a narrowing trend, suggesting potential for increased volatility. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position at $4,750 on September 12, 2025, coinciding with the first forecast price. The stop loss will be placed slightly below the support level at $4,580 to mitigate potential downside risk. The initial target price will be set at the recent resistance level of $4,850, aiming for a moderate profit. To refine the strategy, we will incorporate the RSI and Bollinger Bands. If the RSI dips below 30 during the forecast period, indicating an oversold condition, we will consider adding to the position at the prevailing price, with a reduced position size. Conversely, if the price touches the lower Bollinger Band, it will also signal a potential buying opportunity. If the price reaches the $4,850 target, we will consider moving the stop loss to break even to protect profits. If the price continues to rise and breaks through the $4,940 resistance, we will raise the target price to $4,940 and consider trailing the stop loss to lock in gains. This adaptive approach will allow us to capitalize on both short-term and long-term trends while managing risk effectively. Based on the historical data and forecast, Vaulta exhibits a downtrend with significant volatility. The RSI consistently fluctuates around the mid-range, indicating indecision, but recently dipped below 40, suggesting a potential oversold condition. The Bollinger Bands show that the price has been testing the lower band for a few days, confirming the downward pressure. Considering the support price of $0.464, I recommend a contrarian strategy, anticipating a bounce. We will implement a long position when the RSI crosses above 40 and the price touches the lower Bollinger Band. The entry price will be $0.461. The stop loss will be set just below the support level at $0.458 to protect against further downside. The initial target price will be the middle Bollinger Band, $0.486, offering a reasonable profit margin. To refine the strategy, we will incorporate a trailing stop loss. Once the price reaches $0.486, we will move the stop loss to $0.478, securing some profit while allowing for potential further gains. If the price continues to rise and touches the upper Bollinger Band at $0.518, we will adjust the target price to $0.51. However, given the forecast data predicting a price around $0.46 for the next few days, we should be cautious and consider reducing the position size if the price fails to reach the initial target. The portfolio will prioritize the contrarian strategy with a long position, employing a combination of technical indicators and price action to maximize returns while managing risk effectively. Based on the historical data and forecast, dYdX exhibits a generally upward trend, although with some volatility. The RSI consistently fluctuates, but has recently been trending upward, indicating increasing buying momentum. The Bollinger Bands show that the price is currently approaching the upper band, suggesting a potential overbought condition. Considering the support price of $0.647 and the resistance of $0.718, I recommend a strategy that combines RSI and Bollinger Bands. We will implement a buy strategy when the RSI falls below 40, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.553, with a stop loss placed just below the lower Bollinger Band at $0.544. The target price will be set at the resistance level of $0.718. To refine the strategy, we will incorporate the forecast data. The forecast suggests a continued upward trend, with prices expected to reach $0.697 by September 18, 2025. Given this forecast, I recommend a slightly adjusted target price of $0.697. The portfolio will prioritize the RSI and Bollinger Band strategy with a buy signal when the RSI falls below 40 and the price touches the lower Bollinger Band. The entry price will be $0.553, the stop loss will be $0.544, and the target price will be $0.697. This combined approach leverages both technical indicators and future price predictions for optimized returns while managing risk effectively. Based on the historical data and forecast, SEI exhibits an upward trend. The RSI consistently rises, indicating strengthening buying momentum, particularly exceeding 50 on September 11, 2025. The forecast prices project further increases, suggesting a bullish outlook. Considering the support price of $0.323 and resistance of $0.357, I recommend a long position. Entry price should be $0.316 plus $0.01 is equal to $0.326. Set a stop loss at $0.316 minus $0.02 is equal to $0.298, just below the bottom of the Bollinger Bands to mitigate potential losses. The initial target price is 0.339 plus 0.01 is equal to $0.343, aligning with the forecast price and a reasonable profit margin. To refine this strategy, we can incorporate RSI signals. When the RSI falls below 30, oversold, it signals a buying opportunity. Conversely, when the RSI exceeds 70, overbought, it suggests considering selling. The Bollinger Bands provide insights into volatility. When the price touches the lower band, it may indicate an oversold condition, reinforcing a buy signal. When the price touches the upper band, it may indicate an overbought condition, reinforcing a sell signal. For the next step, I recommend adjusting the target price to 0.343 plus 0.01 is equal to $0.353 if the RSI continues to rise above 70. This combined strategy leverages both technical indicators for enhanced decision-making and risk management. Based on the historical data and forecast, Pudgy Penguins shows a slight upward trend. The price has been fluctuating between a support price of $0.0293 and a resistance price of $0.0402. The RSI indicates that the asset is currently not in oversold or overbought territory, but trending towards overbought. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback is possible. Considering these factors, I recommend a strategy that capitalizes on potential upward momentum while incorporating a stop-loss to mitigate risk. My proposed strategy is a combination of RSI and Bollinger Bands. We will enter a long position when the RSI dips slightly below 50 and the price touches the lower Bollinger Band, indicating a potential buying opportunity. For example, if the price falls to $0.0312, which is near the lower Bollinger Band and the RSI is around 44, enter a long position at $0.0312. Set a stop-loss at $0.0293, which is the support price, to protect against a significant downturn. The initial target price will be $0.0341, aligning with the forecast price for September 15, 2025. If the price breaks through $0.0341, consider adjusting the target price to $0.0402, the resistance level. This strategy aims to capture short-term gains while managing risk effectively. Based on the historical data and forecast, Curve DAO demonstrates a mixed trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates around the 40 level, indicating neither strong bullish nor bearish momentum. However, the recent climb to 52.6 suggests a potential shift towards overbought conditions. The Bollinger Bands show that the price has been oscillating within a range, with the lower band nearing 0.701 and the upper band around 1.02. Considering the forecast for the next week, which starts around 0.767 and peaks at 0.798, a cautious bullish strategy is warranted. We will implement a strategy that leverages the potential for a short-term upward movement while mitigating risk. Therefore, I recommend a long position strategy with an entry price of $0.767. Given the support price of $0.821, we will set a stop-loss at $0.757 to limit potential losses. The resistance price of $0.918 provides a clear target for profit. We will aim for a target price of $0.828, which aligns with the recent high and provides a reasonable return. This strategy combines the RSI and Bollinger Bands, capitalizing on the potential for a short-term upward trend while incorporating risk management measures. The RSI is below 80, and the forecast price is increasing, which suggests a buying opportunity. Based on the historical data and forecast, Dogecoin shows a clear uptrend. The price has been consistently making higher highs and higher lows, and the forecast for the next week indicates continued upward momentum. The support price is consistently at $0.24, acting as a strong floor. The resistance price of $0.275 provides a potential ceiling. The RSI has been trending upwards, recently crossing above 60, indicating strong bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position with an entry price of $0.242. The stop-loss should be placed just below the support level at $0.238 to protect against a potential downside reversal. The initial target price should be set at the resistance level of $0.275, which represents a significant profit potential. Given the strong bullish momentum and widening Bollinger Bands, we can consider a second target price of $0.28 for an even higher return. This strategy combines trend analysis, support and resistance levels, and technical indicators for a balanced and high-potential investment approach. Based on the historical data and forecast, Immutable shows an upward trend. The RSI consistently moved above 40, indicating positive momentum, and has recently crossed 50, further confirming the bullish outlook. The Bollinger Bands have been expanding, suggesting increased volatility and potential for price movement. The forecast data for the next week predicts a continued rise, with prices moving from $0.557 to $0.605. Considering the support price of $0.562 and the resistance price of $0.644, we can formulate a strategy that capitalizes on this upward trend. My recommended strategy is a long position with an entry price of $0.557. Given the recent RSI readings, we will set a stop-loss order at $0.544, just below the lower Bollinger Band to protect against unexpected downturns. The initial target price will be $0.596, aligning with the forecast high for the week and just below the resistance level. If the price reaches this target, we will consider moving the stop-loss to break even to secure profits and allow for further upside potential. If the price continues to rise and breaks through the resistance level, we will adjust the target price to $0.644. This strategy combines technical indicators and price forecasts to maximize potential returns while minimizing risk. Based on the historical data and forecast, Pendle demonstrates a recent upward trend, particularly noticeable in the last few days with the price reaching $5.31. The RSI consistently fluctuates but generally remains above 40, indicating a bullish momentum. The Bollinger Bands have been widening, suggesting increasing volatility, and the price is approaching the upper band, hinting at a potential overbought condition. The forecast for the next week predicts continued price increases, supporting a bullish strategy. Therefore, I recommend a long position strategy. My strategy involves entering a long position at $4.96, capitalizing on the predicted upward trend and the RSI indicating a potential bounce from a slightly oversold level. A stop-loss should be placed at $4.7, just below the bottom of the Bollinger Bands, to mitigate potential losses if the price reverses. The initial target price is set at $5.17, aligning with the forecast and the upper Bollinger Band. If the price reaches $5.17, consider moving the stop-loss to break even to secure profits and potentially ride the momentum further towards a secondary target of $5.25. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ondo exhibits a clear upward trend, consistently breaking through previous resistance levels. The RSI consistently trending above 50 indicates strong bullish momentum. The forecast for the next week predicts continued price increases, reaching $1.17. Considering these factors, I recommend a long position strategy. The entry price should be set at $1.02, coinciding with the start of the forecast period and a slight pullback from the recent high. A stop-loss order should be placed at $1.06, just above the support level, to mitigate potential losses if the trend reverses. The target price for this trade is $1.17, aligning with the forecast high for the week. We can further refine this strategy by incorporating the Bollinger Bands. If the price touches the lower band, it suggests a potential buying opportunity, while touching the upper band indicates a potential selling point. Considering the RSI and Bollinger Bands, I propose a tiered target approach. First target at $1.05, second target at $1.06, and final target at $1.17. This strategy combines trend analysis, forecast data, and technical indicators for a high probability, high return investment. Based on the historical data and forecast, Ether.fi demonstrates a clear upward trend. The price has consistently climbed from $1.08 to $1.47, with the RSI indicating increasing momentum, moving from 45.9 to 69.9. The forecast for the next week projects continued growth, with prices ranging from $1.29 to $1.49. The Bollinger Bands show a widening range, suggesting increased volatility and potential for further price movement. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be a long position based on the RSI and Bollinger Bands. We will enter a long position at $1.29, coinciding with the first forecast price and a lower Bollinger Band. The stop loss will be set at $1.38, just above the established support level, to mitigate potential losses. The initial target price will be $1.45, aligning with the forecast high for the week and the upper Bollinger Band. If the price reaches $1.45, we will move the stop loss to the entry price of $1.29 to secure profits and allow for further upside potential. This combined approach leverages both technical indicators and price action to maximize returns while managing risk effectively.